And hiring in the U.S. cooled in June, with the economy adding nearly 209,000 jobs, a bit down from May. Still, wages rose and unemployment fell. Karina Mitchell is here to start us off with the data. And it was a mixed report, and definitely things in it that the Fed may not be happy about. So what do we do now?
Yeah, absolutely, Phil. It was actually a fairly nuanced report. So as you said, the Labor Department said 209,000 jobs were added in the month of June, below estimates, well below the 306,000 jobs that were added in May. It was actually the softest month for job creation since December of 2022. Having said that, the number was actually still fairly robust. Anything above 200,000 is considered to be quite good. But that's not the number that the Fed is focused on. Instead, they're looking at the inflationary component within this report. So they're actually looking at unemployment, which went down to 3.6% from 3.7%. And they're looking at average hourly wages, which climbed higher. It advanced 0.4% month over month, 4.4% year over year. So this is completely the opposite of what the Fed was looking for. So as you ask, where do we go from here? What does the Fed do? Well, they meet in July, and the consensus is that they will hike then. But their next meeting after that is September. So they've got some time to play around and try and figure things out. One piece of data that they will get next week is inflation numbers, CPI. It's expected to come in the low 3%. So does the Fed then say that low 3% is something they can work with, it's sustainable, and then, sort of veer off hiking aggressively? Do they slow down or pause at that point? Or do they stick to their 2% inflationary target, which means they will have to slash labor, they will have to slash wages? That could lead to a recession, Phil. A lot of people could get hurt.
Well, you know how I feel. I think inflation should run a little hotter, but that's just me. Now, one of the reasons the Fed is letting the economy run hot because it's to help those who are marginalized. I know you're digging into some of the details here, and I'm talking about different minority groups who have different percentages of unemployment.
Yeah, so absolutely. Minority unemployment climbed in this report. So Black unemployment actually hit 6%. Asian and Hispanic unemployment also up, whereas white unemployment dropped to 3.1%. Women are faring worse than men. I spoke to one gender economist about the report. Here's what she said. Take a listen.
Real concern right now is actually Black women. There was a lot of softening in the numbers for Black women in this particular report. So we saw, for instance, 165,000 Black women leave the labor force since last month. And that should be, and they also lost jobs. So that's a real concern for us. And it's not only an issue of fairness, it's actually an issue of economic growth.
And so Roy actually told me that Black women are the breadwinners in 52% of households. So if they're out of the labor force, whether they're sitting it out or they're laid off, that's not just bad for them. It's bad for the overall economy, and it's bad for the next generation. As you say, the Fed has been so careful about taking care of these marginalized people. They'll definitely have to factor in some of this data as well when they think about what they'll do going forward, Phil.
Yeah, and people will continue to keep parsing those numbers over the next several days. Karina, thank you very much, and have a good week.